All right, so now on to point 6, trading without a stop loss. Fred, you want to talk a little bit about, for if anyone is watching and doesn't even know what those words mean, what is it?
So basically, a stop loss is a special type of order that you can set as soon as you hit the sell button. You'll see when you look on your platform, you'll see buy and then you'll see sell, or you'll see something like trade, but it's a special order type that you set out. So before you even get in the trade, you can already predetermine how much you're willing to lose. So say, for example, you get into a trade with $100, you're only willing to lose $10. So as soon as you hit the buy button and your order is filled for $100, you immediately go behind yourself and hit the sell order, and you specifically say stop loss. It varies on whatever platform that you're using, and if it drops down to that price, it automatically sells at a minimal loss. You already exited at the price you was willing to lose, versus you holding on to something you bought it at $100 and now it's worth $60 and you don't know what to do.
So with Prez's example of talking about Lucid, if we look back to Lucid back in 2021, it was $55 in November of 2021. It comes down to $41 in January of 2022. Let's go forward now. Now we're at January of 2023 and it's at $13. Now it's down to $4. So if you purchased it at $55, thinking, oh, it's on its way up, then you could have made a plan somewhere in here. When it's coming down to $38 from $55, you could have made a plan and said, okay, listen, this is going down. Let me make a plan here. If it comes down to a certain point, sell my shares automatically. Sell a portion of my shares automatically. Make a plan as to what you're going to do. And then if it keeps on, like this particular investment did, going down and down and down more and more, you're probably not going to be buying back into it because you're not seeing the potential of it.
Can you go back to that chart real quick?
Sure.
Yeah.
This is a 5-year chart on Lucid.
I bought Lucid, and I can laugh at it now. I bought Lucid. Go back before it hit 50. Go back before. Come up a little bit, about halfway. I say about $30. I bought it around that time.
So that's late 2021.
It was about $32.
That's $24 in October.
I literally watched it go up to 40, 50 something bucks. And guess where I sold it at?
I don't know.
$16.
$16.
Right about there. Yep.
Okay. So
that's what happens when you get into you confuse a trade with an investment, because it could have easily been a trade and I would have made a nice amount of money off of it. A $20 increase. I bought it at 32 and it went all the way up to 50 something, but I didn't sell it till it went all the way down to $16. Like, that's hustling backwards. Didn't have a plan, was looking for the next Tesla, didn't know what I was doing, not knowing that this company wasn't profitable. I'm going off of news headlines. Yeah, the Saudis just bought billions of dollars worth of Lucid, and this particular large hedge fund bought a lot of this, but I don't want to see other people go through that.
What we're trying to stress again is make a plan. If you are not willing to ride the wave, if you do not think that this is a long-term investment that deserves to be in that category, you have the option of using a stop loss in order to mitigate your risk, mitigate your losses. So know that that is available to you and don't hang on. In my opinion, I would not hang on and let it go all the way down and then have to sit here and stress and wait to see, is it going to go back up? I would rather figure out what is my max tolerance here. What is the max that I am willing to lose? And then sell then and buy back in. Now, as far as tax implications and all of that, you're selling it at a loss, you're going to buy, you have to figure out that for yourself. But if it was me, I would rather sell at a slight loss. And then if I so choose, I'm so inclined that I have to have this investment in my portfolio, buy back in, and then again, be mindful of the performance and make a new plan once it's dropped, because I am in this to make money. Make money. That is my goal.
I could have easily bought it at 32, watch it go to 50, set a stop loss at 42, and would have made profit.
Yes.
I wouldn't have got out at the top, but I would have got out in profit instead of letting it fall and bleed out like a falling knife and selling it for a significant loss, kicking yourself in the foot later.
So definitely a simple way in order to save yourself the grief, protect yourself from any big losses. When I hear people say, like, even, and this is something you can also incorporate if you're doing options trading, not just not just on your investments that you're a little bit wary about. So especially when it comes to options trading, I do not understand why people have big losses. That is a place where I'm putting my stop loss on the fastest. You have to make a plan from the beginning, depending on how many contracts you have, whether it's a percentage, dollar amount. Be willing to cut your losses, because just letting it go down with the hopes that it's going to come back up, we can't be over here hoping and praying and